This week, Elon Musk officially took over Twitter Thursday and immediately started making changes. In the first order of business, he sent the CEO and the CFO packing. And those moves appear to signify the end to the tech industry's hellish week. And to recap, Amazon, Meta, Google, and Microsoft were all flattened by the wrecking ball, with each firm reporting slowing sales. Apple, however, was spared the wrecking ball and appears to have been the least worst of the bunch. So in light of the tech wreck, Twitter might have been thrown a life raft, but with an oversized anchor attached. But that's life in a bear market. However, the week is now over, and I hope most of you are still above water. As I have repeated time after time, keep stacking that cash, because cash seems to be outperforming the market. As for this coming week, I'll be out and won't be publishing a video until the next stock market update. For now, let's take a look at the charts. And back to the salt mines, looking at the 2-year weekly chart on the volatility index, and as you can see in the upper left, the symbol is $VIX using stockcharts.com. And we're looking at this because we have a nice pattern, this dish that came on down here, bottomed and based, and now we're heading on our way back up with higher lows, kind of a step pattern on the way up. So we topped here, we came on down, we're now sitting on that 50 MA. I think we'll probably have a little bit of volatility, but I would imagine the probability is to continue moving on down, perhaps toward that 200 MA, and then we'll see if we have another bounce here with a move on up. And so if you're watching things, we have this lower trend line again moving up here. The top trend line is more horizontal around this 35 level, moving straight over. Therefore, we're evolving, moving toward this pinch point. And once we get to that pinch point, then the VIX is either going to pop up or pop down. If it pops up, then the market is going to head down. But if the VIX decides to head on down meaningfully, then the market is going to have a rally. And we're not really sure where we're going to go. So we keep our eyes on this. And now let's go to our charts. And keeping with the theme, we're looking at the 2-year weekly chart on the spiders, the SPY, and the close on Friday was 389.02. Nice bottom base and move on up, and we ran right into that 20 EMA. The next stop is going to be perhaps the 50 EMA. I think the probability is that we will continue to move on up. But let's look at those channels once again. We got the bottom channel line moving through like that, and we bounced off of near that channel line more or less on our way up. But we need to get to the top channel line, which is more or less in that area here. We have a little ways to go. It's pretty consistent with that 50 EMA at this level here, but we'll just keep our eyes on that, see how we continue to move on up. But you can see also that perhaps we're going to make a W formation with this move down here on up, got the reflection back down, came here, and now we're heading on up. So we'll break up here, but the test is going to be, can we get through that top trend line and move on up? This is going to be a level we want to watch out for again in, say, the mid to longer term, and then of course this level here, and certainly this level at that point. But that's going to be a ways from where we are right now. Let's take a look at the oscillators moving on down. Volume's not telling us too much. Definitely we have this surge here, but I think we have to see how the recovery goes into the next week or so. And definitely looking at the MACD, we have a longer term bottoming and basing here, but definitely this looks like a W formation as well. Here, up there, back down, and up. But the fact that this fast line bottom and basing here is higher than back here, we do have some progress. Now, the fast line is just coming toward the slow line here, so we need to break up and through that. But just keep in mind, we're at a -10, so things are still pretty weak. And next week, the Fed is going to speak. So that may change markets. But for now, I think the probability is up. Same thing here in the histogram. Definitely improvement from that level on up through there. Into the price rate of change as well. Nice bottoming and basing in this area here. This definitely is much improved. So I like to see that well above that midline or 50 line. Here into the RSI, we're heading on up, just peeped through that midline or 50 level on our way up. Certainly improvement here as well. And then into the stochastics, pretty much the same thing. It's a little bit behind some of the other oscillators. And then the Williams, also a little bit sluggish, but it is near that 50 or midline, and I think it's going to continue on up again. I think the slight probability is that we move on up into that overbought territory. Hopefully it comes this next week or the week after. So once again, the slight probabilities, in my humble opinion, are that we continue to rally. But once again, watch out for those rate hikes. And for today, that's ChewDog Charts. Thank you.